we have on board with us the management, Mr. Anmol Bhansali, Managing Director of Goldiam International, joining here with us, here to break down this order for us. Good morning, Mr. Bhansali. Meryl D'Souza here. I just want to ask you, gold prices have seen a sharp correction over the past few weeks. How has that translated into stronger inquiries of order inflow from your export customers, particularly in the US?
Good morning, Meryl. Thank you for having me on the show. So yes, gold price correction is a positive trigger for generating order flow. As you would know, Goldiam is a B2B exporter of fine diamond-studded jewelry, both for natural and lab-grown diamonds to US and global major retailers, along with our in-house B2C brand in India. The reduction in gold prices definitely helped because we are now seeing order booking quite aggressively and in an exciting manner coming from our large customers in the US as they try and take advantage of the fall in prices and build in inventory for the upcoming holiday season towards the end of the year in America.
Right, so that sounds exciting. Anmol, hi, Snehi here. Good to be speaking with you. Can you give us a sense on existing customers? Are they moving to higher caratage at all because the gold prices are softening? And how are you even managing this gold price volatility? Can you walk us through what your hedging strategy is and how this is helping you protect margins?
Sure. Thank you, Snehi. So at Goldiam, we are a margin-oriented diamond-studded jewelry manufacturer. So 100% of what we do is diamond-studded, margin-oriented business. We don't have any plain gold sales at all. In that sense, whenever we receive an order from a large global client, whether in the US or elsewhere, we effectively book the gold required for that order on the very same or next day in order to mitigate any impact of gold price fluctuations. In that sense, we don't really get impacted by gold fluctuation and commodity fluctuation, and everything that comes in is effectively booked in terms of raw material requirement within the same or next day.
Right, that's that on the gold prices. But as I'm aware, you had earlier said that you do not wish to expand your lab-grown diamond capacity from the 30 machines which is currently there. Your latest 60 crore export order is for lab-grown diamonds. So what has changed? Are there any more orders in the pipeline, or are you considering to now expand the segment?
So just to clarify, Meryl, our in-house capacity is to grow diamonds. So that is, we have no plans to expand that. We believe that prices of lab-grown diamonds are at a very favorable place in the third party and in the wholesale markets, where effectively to grow in-house versus purchase from strong suppliers, your price delta is not significant enough to require the capacity required to and invest in the capacity to further increase growing machines. Our focus is and will continue to remain jewelry orders, jewelry production, jewelry manufacturing, and of course distribution, where globally it will be B2B and in India it will be B2C.
And, on the India front, on B2C, I will come to you with a question on Origem after this. But first, let's talk about how the order book is shaping up. At the end of March, it stood at around 200 crore rupees. If I have that number correct, can you give us an updated number over there?
So we are constantly booking orders and that number is dynamic. I would, very happily share that we have come off a banner year for Goldiam. FY26 was our all-time high revenue, all-time high EBITDA, all-time high net profit here. With the strength that we've seen and the work being done to penetrate into the lab-grown diamond segment globally and the adoption of the category that we see from our retailers, we have strong belief that growth will further continue. And our overall ambitions are to take our B2B business over the next 3-4 year period to a doubler from the current revenue run rate that we completed in FY26.
Okay, that sounds good, and that's a lofty target that you've set for yourself as well. You're also looking at double-digit overall growth for FY27, so that's the guidance that we're working with right now. But coming to Origem, you've opened your 25th Origem store, and you have about 7 more planned by September for the overall year also, you were guided earlier that 45 to 50 company-owned, company-operated stores is something that you're looking at opening. How has the response been so far for the stores opened? And if you can share with us, if you are on track to open this 45 to 50 stores by the year end.
Sure, absolutely. So we're very excited. This is, something that's close to all of our hearts, seeing the sort of growth that we have seen in the export markets for this segment of the industry. We are very excited to bring it to the Indian consumer as well. We're seeing, increasing adoption and definitely month-on-month growth in our Origem stores, both overall as well as on a sales per store basis. We believe that we will, keep it, and we are very invested to keep expanding capacity of Origem and introducing the brand in newer metros and deepening our presence within metros. At 25 stores, with 7 more booked by September, there's a long runway for growth over here, as you can rightly imagine. We believe we're just scratching the surface. Stores are more or less breaking even within that 6-month period since opening, and of course, depending on region and type of store, mall versus high street, etc. And we hope to continue that expansion trajectory as and when store maturity keeps growing and existing basis of stores further delivers targets that we have internally in terms of the sales per store metrics that we want to achieve and deliver to the company shareholders. Regardless of that, though, a lot of work is going on in the background to sort of deepen that sales per store metric. We are working on sales enablers like old gold exchange, purchase plan schemes, alternate metals, enhancing the sort of collections and design, including VVS exclusive collections, which we believe will, very soon show effect into the Origem revenues as well.
Understood. I just wanted to understand, Anmol, are you looking at franchising opportunities at all right now?
Sure. Thank you. Not at the very short term. I think it could be something we'd consider towards the later half of the year or next year. But currently, not at the moment. The company has enough capital available to invest. Our B2B business is extremely cash generating, and we have the chops as a listed jewelry manufacturer, wholesaler with a 35-year legacy to build and invest into this brand. At some point, to further expand the expansion sort of targets, we could consider it, but it's something that the management has not taken a decision on, and honestly not being reviewed for the immediate short-term period.
Understood, Anmol. So now with the Origem stores planned this year, are you equally optimistic about domestic demand, or does the bigger opportunity for you still lie in exports?
So the company as on date is probably 95% plus, even higher, B2B and export driven company. Our B2B margin profile is very strong, and we continue to believe that it will be stronger in the coming quarters as well. Having said that, I think the long-term trajectory for the company in the 4, 5-year, 8-year period to come ahead is to also keep investing in the B2C brand and build the sort of top of mind recall for India's customer base of lab-grown diamond jewelry, to think about Origem and Goldiam as their retailer of choice. So by far, at current stage, the company is a dominant and OEM of choice for large retailers globally. And while that piece of our business will continue to grow, faster growth will, of course, come in from Origem and the investments being made for the B2C brand in India.
Understood. So that sounds good. Anmol, I regret cutting short this interview due to paucity of time. There's still so much I want to speak to you about, but perhaps for some other time. Thank you so much for your time today, and great as always to be speaking to you. Thank you so much.
Thank you so much.
Thank you.